One of the big losers today on the TSX, Africa Oil. What happened there? We're joined by the one and only Stephanie Hughes of Bloomberg News. Stephanie, always great to hear from you. What's the story with Africa Oil?
Hey, Andy. So focusing on the worst performer on the TSX today, Africa Oil, which fell as much as nearly 15% after the company really just reported a surprise loss of 19 cents per share, which caught a lot of investors off guard since they were largely expecting a positive earnings picture. So this amounted to just a loss of nearly $89 million. To make matters worse, Bloomberg Intelligence also flagged a 2024 guidance drop of about 10%. So Africa Oil is now anticipating a range of 16,500 barrels of oil to 19,500, which really weighed on the company. So this is bad news for a company that has seen shares already down about 17% so far this year.
Energy fuels, we were talking about this yesterday. They're a U.S. player in rare earths, vanadium, and did I say uranium? Uranium, vanadium, and rare earths. What's going on there?
Sure. So these shares were up nearly 7% today, and it's continuing on a winning streak, as you kind of alluded to there. And this is likely tied to an announcement that the company made during its earnings, where it was going to ramp up production, or it was going to start preparing 2 uranium mines in Wyoming and Colorado. So this was announced during the earnings late last week, early this morning, but this is something that investors started digesting as mining trade publications really started picking up the news today. So another interesting tidbit surrounding this production is that the company expects production to ramp up within the year, and it should increase the producer's run rate of uranium to over 2 million per year as early as 2025.
Tell us your thoughts on BMO. One analyst distinctly not impressed here.
Yes, so BMO, no surprise, been a laggard here. So it fell as much as 5.8% after its big earnings miss. $2.56 per share is what it reported, falling short of analyst consensus, which was around $3. The analyst you were talking about, Scotiabank analyst Manny Grauman, said there's just no possible way to put a positive spin on a core EPS miss of 15%. Of course, the earnings were weighed by capital markets troubles, insurance, lower revenues there, higher loan loss provisions, and a bunch of one-off charges that might have rubbed investors the wrong way.
And Scotia, of course, has been out of favor, but beating expectations today.
Yeah, so they had a pretty decent quarter that I think surprised some analysts. They had muted expectations heading into the quarter, and a lot of them pointed to strength in the Canadian and international segments. So they were a beat. Our analysts described it as a big beat with EPS of $1.69 per share. So yeah, they spent most of the day being in the top 10 performers on the TSX.
Stephanie, always great hearing from you. Thank you very much indeed. Stephanie Hughes of
Thanks for having me.
Bloomberg.